Welcome everyone to a new chapter of No Damn Excuses, or in Spanish, Sin Malditas Excusas. Today we have a special guest with us, Rodrigo de Alvarenga. Rodrigo is a powerhouse in the world of startups, entrepreneurship, and innovation. As the managing partner at HAG.Group and HAG Ventures, he's been at the forefront of venture capital, providing strategic business design, entrepreneurial, corporate education, and fundraising services for startups and corporates for over a decade. Rodrigo's expertise doesn't stop there. He's an Astor Award winner and is recognized by Thinkers 360 as a top ranked expert in B2B, open innovation, startups, and entrepreneurship. With over 12 years of experience, he's founded, invested in, mentored, and supported numerous startups across sectors like health, education, energy, real estate, and social impact. His passion for leadership and tech based entrepreneurship is evident in his involvement in initiatives that promote the growth of the innovation ecosystem across LATAM, Europe, and the USA. He's associated with the IBGC's Governance Committee for Startups and Scale-Ups, the Blitzscaling Ventures Fellowship Program, and the Marketplace Risk Advisory Board, to name a few. Rodrigo is also an academic currently wrapping up his PhD in production engineering and system. He's been a visiting professor at esteemed institutions like Porto Business School and FGB, Fundación Getulio Vargas. His teachings and publications span topics from entrepreneurship and venture building to innovation and finance. With a career that's taken him from Brazil to Europe and the US, Rodrigo's insights into the global startup ecosystem are unparalleled. Whatever it's his role as a venture capital fellow with Blitzscaling Ventures, where he evaluates investment opportunities in the LATAM market, or his time as a mentor with the Copernicus Accelerator in Europe, Rodrigo's impact is felt worldwide. Rodrigo, welcome to the show. We are thrilled to have someone of your caliber with us today. And the only thing that I need to say before starting as well is, oi, tudo bem com você, Rodrigo?
Tudo bem. Yes, everything is great. Thank you for asking. It's a pleasure to be here, Rodrigo.
Nice to have you here as well. A lot of different companies that you have been in, studying a lot. I mean, your curriculum is like enormous.
There is this thing that my wife always say about me that when I stop doing if I retired and stop doing everything, I'm gonna die the very same day. So the secret is that to keep in motion, right? Always doing something. And I love learning, so studying and learning has always been part of my life, even though some parts I like the most, and others I don't like that much, but yeah.
Excellent. And Rodrigo, from where are you connecting right now?
I am connecting from Portugal, and 5 hours ahead of you. And I just finished up 2 hours ago. We are delivering a program here focused on open innovation for corporates and startups.
Amazing, amazing. Rodrigo, I do have a lot of questions for you. I want to guess, acknowledge, I'm intrigued on knowing a lot of different things. But the first is, For people that doesn't know you, and even though I introduce yourself, what can you tell us about yourself, but without mentioning the professional side? What can you tell us about yourself, about you specifically?
Okay, so first of all, I must say that I have always been the why guy since I was a little boy. My mother still have some of my grades with notes from professors saying that they couldn't make me stop asking whys and stop moving around and doing something altogether. I am also married to Claudia, father of Pedro. um, I am. I see myself as a leader goes like I see myself as a servant instead of like someone to be served. So whenever and all the things that I have done that does not connect with my profession over the years, I did like to serve others one way or another. Aside from this, I must say that I am a Christian and also a very shy and private person. So in general, I do not answer questions about my personal life, and that's because I just don't know exactly what to say. My wife always does that for me, even to like, for example, whatever news to share with my parents, for example, that's my wife's job, one of their jobs. He has to tell everybody about the things that I'm doing because otherwise I'm not going to say anything. So I guess I've been thinking about this over time because I've been asked this question more recently, more and more, and I guess I see myself as a mix of three characters, more or
Okay.
less, kind of. So far, this is the best representation I've come up with. So it's I am a mix of Sheldon from the TV series of the nerds people, right?
The
Like
Big
that.
Bang Theory.
Yes, exactly that
Yeah.
one. I am a bit weird and have my own ways of doing some stuff. And I love people. I love to serve people, but I don't like people that much in a way like Sheldon, right? So it's a weird relation with this loving but not liking that much. I would say that I am one third Sheldon, one third Gimli from the Lord of the Rings. Gimli
Mhm.
is the dwarf. Everybody wants to be like the most beautiful character, strongest, etc. Blah blah blah. But I really connect with the dwarf.
Okay.
The dwarf is the character that it's not like in front of everything, but he always get the job done. Always get the
True.
job done, right? And he carries a lot of weight with no complaints, no nothing. It's like,
Mm.
what is the thing to be done? And then it's going to be done. That's it. And the other part, I would say, the other third would be Samwise Gamgee from the same fictional book, which is the guy who he's not the main character again, like the friend of Frodo, who actually says one of the things that I always cry when I see this because it represents me in such a powerful way. If I can't do it for you or I can carry it for you, I'm gonna carry you because this is me. I guess um, although I have this loving people but not liking people that much, I am always someone who are gonna do everything that I can to help the fellow man or woman, no matter what. Doesn't matter if it's personally or professionally. I am always available to help somebody if it's something that I can do, right? And that's like so far. This is the best description I came up with.
Well, very good. Of that, I only can say probably that you are better expressing your emotions by actions rather than by words, probably.
Yeah, one of the phrases that I most like is like, what you do is so loud that I can hear what you say.
Love it.
So this is I have like a few phrases that help me guide myself when I need some I wouldn't say wisdom, because wisdom comes from other places, but when I need a reinforcement, right? This is one. Another one is like, the right is right, the wrong is wrong, and they don't change places, only you do. So when you catch yourself trying to convince yourself that what you're doing is not wrong, it's absolutely wrong, you have crossed the line, go back.
Wow.
Because if you need to be convinced, that is everything you need to know that you have to go back because you're on the wrong place, right?
Mm.
So yeah.
Rodrigo, and in this month of October, we are interviewing a lot of different professionals that are immersed in the venture capital world. You are one of them, and I was thinking about it, and probably you are the only one for the moment that speaks a different language, different from Spanish. And one of the things that probably I need to ask you: do you believe it is necessary to have studied what you study to be part of the ecosystem of venture capital or not? What do you think?
Um, well, absolutely no. I would say that it's necessary for you to love learning, to be willing to take risks and fall hard, because you're going to make mistakes that are going to be huge until you learn. And after learning, you're going to keep committing mistakes, because there is no perfection in this world. Even less if we're talking about venture capital, because venture capital means like the shorter word is risk, taking risks, right? So the important thing is like taking risks, falling hard, learning from it, and from time to time, being humble enough to understand that you have to relearn, recycle, and do it all over again, always moving forward. So the one thing about being an investor that I can share right now is that doesn't come. Of course, if you learn technical stuff, is going to help you. Yes. Is it going to make you a great investor? Not necessarily. And I can share right now some of like some things I've learned over the journey. For example,
Okay.
in general, CFOs are bad investors, not because they don't
Better.
know how to handle the technical stuff, because their mandate is different from investing money for a long term, risking to lose everything. A CFO mandate tends to be, I need to maximize return.
Mm.
That means if I have several projects in front of me with better paybacks, my mandate tells me that I should invest the money available in there, because I don't have money for everything. So, not the person, but the function of a CFO is not a good function to become an investor. You have to change your mindset to do so. For example, in general, if you go to school, study business, and do finance, etc., well, you're going to know math, you're going to know the numbers, etc. But that does not teach you how to make a perfume. That does not teach you how to understand the consumer behavior. That does not teach you a lot of things. And when you're assessing an investment, you are pretty much betting on somebody else's ability to deal with matters that you do not understand that well, and to convert this into results.
Mm. Yeah.
So, of course, finance helps, of course. But at the end of the day, there is a study published by Harvard Business School, Harvard Business Review, where they have compared three different things. to measure which group would perform better. A group of new investors, less experienced investors, angel investors, AI, or a group of seasoned investors. And the group who performed better was exactly the most senior investors, because it's not just about logic. It's about things that are not, I wouldn't say higher, but I would say much more complex than logic. For
Whoa.
example, the logic back there during Ford's time would be faster horses. The logic, if we consider the automotive industry and the power they used to have, the logic would be no Uber whatsoever. But somehow the logic was challenged and turned into, from owning cars, assets, into mobility services. So innovation is pretty much about changing the logic. I love an economist that is, his name is Schumpeter. He is the grandfather of entrepreneurship and creative destruction, and he basically was the first person who actually realized how the entrepreneurship and the innovation played economies into fostering growth. So he understood that there will always be the next concept, the next approach, the next technology, the next company who is going to kill what was there and bring something new. So if that's true, you can study to cover a basis for sure, but to become a good investor, you're going to have to go out there and make mistakes and learn and work with entrepreneurs, closer to entrepreneurs. Eventually, you should try to launch your own company so you can understand the journey better. And all these experiences will help you to forge a good investor over time. Investors are forged over time, and they have to lose money, because otherwise, oh, I always get it right. That's a lie. Nobody does that. So they have to lose money. They have to win money. They have to understand the ups and downs, and they have to understand not from the perspective of, okay, I understand the economy behind it. No, I understand the pains behind it. I understand the learnings. I understand, all the tricky aspects that will suddenly transform the existing reality into a new one. And you have to cross this bridge exactly when it is a good opportunity for you to produce results and impact. At least I am always for the impact and results altogether.
Rodrigo, you mentioned a lot of different things, aspects, behaviors, but I want to know, how did you get involved in the world of venture capital? And probably also why specifically?
Yeah, well, first of all, by chance. My plan was completely different from what happened. So my plan was, I was considering moving out of the financial markets. I was preparing myself. I started a consulting company. I was not bold enough to leave the financial markets and start the company right away. So I started the company first, so I could create, like, okay, let me create some revenue first and to structure this first. And when it's ready to pay me, like my salary and everything, then I move out, right? So I was not an entrepreneur whatsoever when I started thinking about it. By chance, I was approached by a group of people that I knew, not friends, but acquaintances of mine, and they proposed me, well, we have this business opportunity. We need some cash to test drive if it's going to work. Proof of concept.
Okay.
I was like, well, yeah, okay, tell me more, right? Tell me more. And I was like, okay, I'm not leaving the financial markets anyway. My company is not ready yet. So, let's see what's going to happen, right? And from the first one, I end up doing 5 during like a 3 years period. But what happened was that after the first one, I felt like, oh, this is interesting, right?
5
Perhaps,
investment in?
yeah, I did the it was a small investment to test drive a business to check if the market would actually validate it. So I did the investment, but because of it, I end up curious about, like, the why boy, right? I was curious about, okay, but is perhaps there are other people doing this, right? Perhaps there are different ways of doing this. Perhaps there are other opportunities in here. So I start asking questions. I end up visiting Silicon Valley, and I got disrupted when I visited Silicon Valley. Not because it was possible to copy paste to Brazil, but because it was like the first time in my entire life I realized the Schumpeter idea of, yes, the creative destruction is going to completely change and reshape the business we know and the way we know it based on technology. Doesn't need to be software. Everything else is already changing, and this is going to change completely the landscape for business from now on. And it's, when I first traveled there, it was like almost 13 years ago. So I was like, wow, this is amazing. And I visited Google, all the companies there. I took the pictures, etc. 2 months later, when I came back, I was in the bathroom looking into the mirror, brushing my teeth, and I was like, okay. Suddenly, I was struck by this realization. Rodrigo, you are so thrilled, so energized, so, wow, we have to change everything, etc. But the only thing you did was pretty much that you talked to interns, you took pictures of the brands, but you haven't done anything relevant, right? You haven't talked to anybody relevant. You haven't learned a thing, anything. And it was enough to change your vision of what to do. Go back there and start connecting with people and learning from them and with them. And that was exactly what I did. So I did it for a while. I started learning. I end up convincing myself, yes, I have to leave the financial markets. The first opportunity I had, I left. I took over my company. I changed my company into a venture builder. And from there, I started 2, let's say, different lanes, new career. One in Brazil and another one internationally based on all the relationships I have established. So because of it, I end up now in the present. I have done projects, I have done programs, I have run acceleration programs, venture building programs in conjunction with universities or corporates. I have been hired by corporates in Europe, MENA region, Canada, US, LATAM, Brazil. I've been to Asia, always doing what we do, which is venture building, corporate venture capital, open innovation, and like services and advisor services related to this, and executing projects with either universities or corporates or NGOs internationally. In Brazil, we started fostering as much as we could the Brazilian ecosystem. So we started sponsoring events. We brought into Brazil Startup Grind. We helped Founder Institute to soft land into Brazil in the very beginning. After that, we kept helping with events, mentoring, etc. Always bringing to taking to Brazil actually the learnings from overseas, not just US first, but after that all these other places. And we never stopped so far. And I found out that this is the profession. If I could invent something in the world, I would have invented this profession when I was 18 years old, so I could start earlier. right? But most probably I wouldn't have the same mindset I have now because
Mm,
of the lack of this 21 years in the financial markets. But anyway, I love what I do. And
amazing.
I do not like, I don't love every task, everything. I love what I do on a macro
Yeah.
perspective. And also that comes with things that I don't like doing, but you have to do anyway, right?
Like for example, what do you dislike to do?
I spent many years as a regional director or superintendent in the corporate banking division, investment banking, um, and global clients, etc. So always in the business development part or in the investment banking thing. But I hate selling. I can do, I am able to do, I am capable of doing it, but I hate doing it because first of all, I don't like to sell what makes money. I like to sell what solves the problem. I
Mm.
have this. I am completely passionate about complex problems since I was very little. So if you want to see me like forget about everything that is happening around me, give me a complex problem, I'm gonna have my own world there. I'll be solving that somehow, and I love to do this. So what happens is that I don't like that you know that effort. I respect that because I don't like doing. I know this is important, but the way I envision it is like not selling what people don't need, but actually selling what they need, even though sometimes or most of the time they they just want to buy what they want to buy no matter what, right? So I have some problems dealing with this because, like, for example, I have had situations in which clients of ours came to, okay, we want to hire this, and oh no, you don't need this. Doesn't make any sense because this is not your problem. Actually, your problem is this other thing. We can
Mm.
solve that thing, and this is going to be much cheaper for you instead of spending a lot of money just to do something that's not going to help you whatsoever. But then if you do this Sheldon part of me, right? What ends up happening is that if the person hiring has a mandate and the mandate is I need this no matter what because this is what I have to show off, so you end up not closing the deal, right?
Mm.
And this part I really don't like. I like to participate in the killing meeting, which means the meeting that you're gonna actually build up trust about what's going to be done, and that is going to be done, and it's going to create value. This I absolutely love. Everything else, I am the worst person to handle this. So, and I have the utmost respect for people who actually can do it amazingly well, but that's not me.
That's quite interesting, Rodrigo. Rodrigo, you mentioned that your company has corporate venture capital and also venture capital. I would like to know a little bit about how do you see the big picture of both, like taking in consideration probably venture capital and CVC in terms of, I don't know, what is your big picture of what is happening right now in the world or in Latin America or in your country specifically? What can you say to us?
Well, first of all, I guess here I'm gonna share some things that is the like I'm not giving anybody advice on how to invest right now. I'm just sharing how I see it, and it's important to say that the the way I see it is a very unique, or at least not common to find out there, perception of things, because it's a combination of someone who spent 21 years in the financial markets as a I did everything strategic, including being a director in charge of many different things. Plus, it's been almost 7 years now that I'm a board member in companies, different sizes, different challenges, etc. Always looking into open innovation, how to do investment in startups, how to build up startups or accelerate, and how to create new businesses in conjunction with entrepreneurs. So aside from the banking, like more or less 7 years here, almost 13 years venture building companies with entrepreneurs, creating programs, running programs, designing or co-designing programs in different parts of the world and different industries. So first of all, I see that we've been hearing and reading about the numbers on CVC and capital, venture capital as a whole. Like, oh, the numbers are going down because of the crisis, because of the war, etc. First of all, we have to understand this. This is like anything in economy. If you have an excuse, you own the money. You have an excuse to drop the prices, you're working in your favor, right? So as a whole, if you start seeing like some things are happening in the near future that justify me to pay less for an asset because I am expecting the market to keep going down, so buying now, it's going to be more expensive than tomorrow, than the day after, etc. So that pretty much explains why we have been seeing like a drop in the total amount invested, especially in US. So there are different things happening. Investors are waiting until the prices are rebalanced, that's for sure, but the money is there. That's the important thing. The money was fundraised. The money is already waiting to be deployed. There are new funds being raised and ready to deploy capital. So the money exists and is there. And they're gonna have to invest such money into new businesses one way or another. And that's not going to take forever. It's gonna take next year, the year after. We're gonna see an adjustment, and from this adjustment, we're gonna see prices going up again in 2 years' time, if not, I would say on average 2 years' time, no more than this. Different geographies will see this or are seeing this in a different way. For example, Latin America and Brazil, the volume of capital, international capital being invested there was always much less than in US or Europe, for example, or China or some places in Asia. So what's happening right now is the total number invested by CVCs is still growing. The number of CVCs is growing. The number of VC companies is growing. The money raised to invest in startups is also growing. The speed to deploy the capital dropped, but the capital is being accumulated, ready to go. Early stage is suffering much less, if something. Late stage is suffering more. The reason being, it's easier for investors to check if you're performing well as a company. If you are like C round, Series C, Series B, it is already possible to check on your financials and understand if you're performing well, if there is actually like a path into profitability, if you actually are managing to create the growth you promised back there, etc., etc. You can check on that, right? So important to say, the capital is there, and we have new funds being launched, if not every day, every week, every month. So the money is there, and we're gonna see even more money being ready to be deployed in the very near future. The war in Ukraine and the war now in Israel and Palestine is both of them are very unfortunate to be happening. But independently of these two situations, this will of course affect this again, the speed, because the money is there. The speed will eventually remain in a slower pace, instead of us seeing an acceleration or gaining momentum this year or next year. It's going to be about 2025, most probably on. But that doesn't mean we are not going to see growth. Important to say that when we answer this question like this, it seems that everything is not performing that well. And that's not true. Another side of this story is that the research on new technologies like 3D printing human organs, biotechnology, nature-based solutions, decarbonization, climate change, health, from the pharmaceutical point of view, as well as from the well-being point of view, education, fintechs, etc. These are industries that are, no matter what, they are growing. So we have seen a change where the money is being invested. AI, for example, was zero a few years back, and now it's like, wow, everybody is, just, dropping money into AI. So there is no one answer fits all. What's important to realize is that we are on the verge of changes in the basis of our, not just economies, but the technologies we use as a base for everything else. So electric cars, a reality. Hydrogen is pretty much there. Aerospace industries growing a lot. Satellites deployment growing like hell. Biotechnology, the same thing. Cancer, never ever we saw that much amount of money being invested in things that are focused on curing diseases like this, because the breakthroughs are accumulating faster and faster now, and the big data phenomenon and AI will help to speed up the last mile in some specific fields that will reshape and change industries, entire industries. And when you have a change like this big, all the change itself will, like, it creates a chain effect, changing suppliers, changing the entire chain into something else, or the suppliers you used to have are no longer capable, or they're going to have to upgrade. So if we saw like the industrial age back there as a revolution, we are in the middle of a much bigger revolution. I am not advocating for the singularity phenomenon, because I really don't care, and I don't want to live forever. And but that's me. But the point is, there's so many things almost there, and they're moving forward anyway, and they're gonna transform a lot of what we see and how we understand the world nowadays. Quantum computing, 10 years ago, science fiction. 5 years ago, reality in a very controlled world. Today, this reality is getting bigger. AI, we are discussing about ethics, etc., blah, 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 but it's there. And we are not going to be able to close this Pandora box. There is no way we're going to revert this into, let grab everything and put into this box again and close it down, please. There is no way we can do that. So all things considered, the money that's going to be invested in all these technologies that are on the verge of extremely relevant breakthroughs, the money is waiting, or is there, or is fostering this. and this is going to create the next hype and wave of valuations that will skyrocket, and that will create a lot of value out of creative destruction. Schumpeter again. Old industries that are not going to fit into what's coming next will be substituted by the next industries. So consider the automotive industry. They used to sell cars. They sell cars, but they are joining forces because they actually do not have enough power to survive unless they join forces. That's why we've been seeing a lot of companies buying other companies to have economies of scale, so they can actually face this change. They won't need the same number of factories anymore. We won't need the same speed to produce cars. It's going to be much more about service. So if you check the prices of cars, you're going to see that there is a different trend happening. The data is there, hidden kind of, but the prices will adjust to consider that the market is different. Rental companies who used to rent cars, now they rent cars in different ways. They rent for Uber drivers. They rent for other purposes. So the volumes of cars they need in numbers is smaller than before, because they can better use the same asset. So we have to understand that we cannot look into this zooming in. You have to zoom out to understand what is coming. There is a tsunami coming in terms of changes that will be a great, and this tsunami is a huge opportunity for investment. Not because of it's going to help people to make more money. Yes, it will for some. Some may die in the process, yes. But the important thing is this tsunami is going to change and reshape a lot of industries into something else. There are those corporates who are preparing themselves. There are those corporates who are still trying to figure out what's going on. And there are corporates who are still asking, why do I need open innovation? So, how can you survive such a change if you do not even understand what's going on?
Yes.
I know that I deviate a bit or a lot from your original question, but that's just to provide like perspective. The perspective is, yes, the money is there available. Yes, the money will be deployed. Yes, there will be more money in the near future. I foresee more and more money being somehow redirected into venture capital or corporate venture capital. I see more corporates doing that, which is interesting for entrepreneurs, because corporates by having corporates doing that, what we are seeing is a phenomenon that is there will be other options for exits. And that also connects with our own thesis. So, for a founder to have an exit, you either go for an IPO, unicorn/IPO approach. Other than this, somebody has to buy your company, right? And the point is, if you check on how many companies Google acquired, how many companies Intel acquired, how many companies Microsoft acquired, many companies, hundreds of companies. Now, the companies who are not acquiring anybody or doing acquisitions, looking into, I am an industry, I produce this piece. I'm going to buy my competitor who is suffering from financial downturn, so I'm going to be able to produce more pieces like this. They're going to look into completely different opportunities to buy companies, to create value that they are not able to create by themselves because they are industries, but they have money. They have cash available, they're cash rich, or they have access to cash. or credit. So more companies will buy startups, and this will create a different, let's say, it will change the options for exits, and that's what we foresee for the future. And I don't mean like a long-term future. I mean 2 years from now, this is going to be, everybody's going to be talking about it, and you're going to be able to prove I have this recorded 2 years back. Somebody told me that.
Rodrigo, that's an amazing insight. For everyone that is just watching, we are talking with Rodrigo de Alvarenga, managing partner of HAG Ventures. Rodrigo, I would like to speak right now about HAG Ventures exactly. Can you tell us what it is? What do you do? What's the history of HAG Ventures?
Great. So, in a nutshell, we started, as I mentioned back there, 13 years ago by doing, by chance, our first attempt of investing in a proof of concept startup that was not software based. After that, we did another four. And during this 3 years process, we also started a learning curve by visiting Silicon Valley and learning a lot of things that completely changed and reshaped the way we saw it. From 2013 on, I left the financial markets. I took over my company, transformed it into a venture builder, and we started doing three things. We started working with entrepreneurs. By working, I mean angel investing slash helping them to organize the company, to understand about how to become a company. The startup hype, nice, but actually, if you want to have value and to fundraise, you have to look like a company or a future company, a company to be, because you actually understand that you have to capture value out of capturing market, right? So we started working with entrepreneurs as an advisor, as an accelerator, as a venture builder, as an angel investor, and we kept learning from this experience. We did many startups in different verticals: fintech, education, health, IoT. We did SaaS, we did B2B, we did B2C, we did well-being, we did I'm forgetting things, but we did all sorts of energy efficiency. We did a lot of different things to learn and to, as much as possible, to help entrepreneurs. We started this by doing this. Okay, we're gonna support you when investing money. We had a piece. When not investing money, I'm paying for everything, but I want to work with you as close as possible. So we learn from this experience in exchange for all the support we are providing, right? So we that way we develop a venture builder by venture building together with entrepreneurs for real, instead of like I mentored. I also mentored, but the mentoring is like eventually, right? We did a daily basis thing. I provided a marketing team, I provided a sales team, I provided a design team, I provided all sorts of support that we paid ourselves. So we invested in two different ways. We invested cash and we invested an entire infrastructure to work with entrepreneurs. We did this for many years. We also start doing the same thing outside of Brazil in conjunction with others in the beginning. So we could learn from all different experiences, different geographies, different markets, different people, different human factor, different legislation, different culture, different everything.
Yeah.
So we learn by doing over many years. And out of this, two different things happen. Three, actually. First, we were invited back to the corporate world as a board member and or as a senior advisor for corporates to help them deal with open innovation, digital business transformation, and corporate venture building, corporate venture capital, etc. All these things started happening, and they started ask us, "Can you help us? Can you help us?" And we start. That was when the consulting part of the business was born. This connects to more or less 2016, 2017. Until then, we were just learning, spending money and learning as much as we could. And at the same time, the venture building part of it, we end up learning a lot how to venture build something, right? So we started being more laser focused, and we stopped doing everything, and we started choosing a much smaller number of startups, laser focused, so we could have better results. From that point on, we were looking for results. So we end up having 4 exits. One of them was a startup sold to a 50 times bigger startup and then sold to a multi-billion-dollar company. So also another learning curve, but a different one. And we started helping the startups not just to launch, but also to move forward, to gain traction, and as much as possible to be moving in the direction of a Series A. The corporate side of the things kept moving forward, and we were asked to help them to find and invest in startups. I want to acquire a startup, but I'm not sure how to do it, or I'm not sure how to do a valuation, how to do a due diligence, because it's a completely different animal. So we start doing this for corporates, not just in Brazil, but Brazil, US, Canada, Europe. And we also, in the same time, more or less 2016 to 2017, we started also doing educational programs to target people, especially young entrepreneurs. And we did it for many years. We still do this with the European Innovation Academy in Europe. We did with the Arab Innovation Academy in the Middle East for 4 years. We did this with accelerators and other universities, etc., in different parts of the world. And these 3, let's say, different businesses, education, corporates, and startups, end up creating the perfect intersection for us to finally forge a thesis, an investment thesis that we consider a very successful one in terms of chances to create higher returns, but also impact. And by impact, I mean, because after merging all these 3 different businesses into the same pot of things learned and a journey, combining this with my own journey in the financial market, etc., and expertise, we finally got to a point in which I felt comfortable enough to create a venture capital firm. And that's exactly what we are doing now. We are now fundraising our first fund. And by first fund, I don't mean my own first fund. I mean the VC firm first fund. That's going to work exactly with this intersection. So this is us pretty much looking into pre-seed, seed startups, B2B, that can connect with this intersection of talking to open innovation in corporates, connect with corporates as a venture clients, connect with corporates from the investment perspective, because we fully believe that in 2 years from now, more or less, a bit more, we're going to have a much bigger market for exits out of M&As, without necessarily meaning that corporates are going to somehow screw the entrepreneurs, because corporates are learning that they have to play this game like transparently and in a way that both sides can win without messing up with the business. Otherwise, they end up having an asset that does not has any value whatsoever. So the thing is, we fully believe in this strategy. We do not go for an IPO strategy because in most cases, except for US, there is no IPO market for startups in other places, nor secondary markets to maintain the prices, right? So whatever you sell when you IPO, great, but after that, prices are not necessarily going up because you need secondary markets to keep prices going up, not in a short term, but in a medium to long run. You need to have a market for this kind of stock, right? And actually, most investors that we have out there are either institutional investors, old investors, retirement funds, etc. They are not investing a lot of money in digital assets whatsoever compared to the total amount of money they have, right? So this is
Rodrigo,
great.
and if I can and if I can ask you, because you said that you were raising the fund, that means that nowadays the only thing that you have put some capital calls is with the venture, we
Yeah.
can say, like, so.
Yeah, we have done investments since then. So we have done more than 75 startups over time in different ways. Myself directly, or after that, we used different structures. We did a lot of startups in different countries as well. Unfortunately, the pandemic was very hard on everybody, including us, because we are an extremely early stage investor. So we always did that, and we were aware of the risks. The pandemic was not a risk anybody was, predicting. But anyway, we have done a huge number of investments over time. But what changed is that recently, last year, we made this decision. This year, we started building up the infrastructure. And now we are launching because now we see exactly all the things in place. All the pieces we needed are in place. And I feel very comfortable to not just manage my own money, but manage somebody else's money into this window of opportunity that is exactly that change that is coming and is happening. Some changes are already happening, some are about to happen, and others are coming right after that. And it's easy for us to see that because we travel around the world to many different places, and we are seeing what's going on from the research and from the university side, from all the changes in research about equipment, health, AI, and all sorts of things that are pushing for a huge change. And that's exactly where we see that there is a huge opportunity for funds to invest in companies that are going to impact society, that are going to impact, economically speaking, other regions, not US necessarily, just, right? I'm talking about LATAM, even talking about Europe, MENA, for example, Middle East and North of Africa. Africa has a booming innovation ecosystem happening there. Asia has a lot of things happening there. So the conjunction of all this phenomenon, all these specific things that are happening, they are converging into this huge opportunity. And that's why we are launching a new fund right now.
Sounds amazing, Rodrigo. I do have more questions to understand a little bit about how do you somehow analyze and evaluate the possible investment that you are going to perform, or you can use the experience that you have with the 70 something that you already mentioned. And the idea is to answer those questions in probably around 15 minutes. So we do not extend a lot. So the first question is, how do you evaluate the possible investment opportunities for the fund or for the CVC?
Well, when we're dealing with CVCs, that means this is a corporate as an LP, a limited partner of a fund, and the fund is built out of a strategy that fits the corporate needs, right? So in that regard, we always advocate for pre-seed, seed stage investments, no more than a small, let's say, number of follow-ons into Series A, because this is the sweet spot in terms of value creation. All the cases that surpass the Series A and can gain traction and gain market share will also gain value over time in a much more structured way. And by having CVCs as investors, possible exits is going to be an M&A few years ahead, right? So for CVCs, what we do is we build up a strategy focusing on corporate needs that can ensure what they are looking for. And in general, we always look for, or at least this is our sweet spot, is to work on the pre-seed seeds stage and some follow-ons. When a corporate is also looking for, oh, I want to build up a fund that is focused on Series C, for example, that's not us. Our expertise is much better applied if we are talking about pre-seed seeds, getting into a Series A, and that's it. This is our sweet spot. By talking about our own funds, in this case, what is happening is that we are looking into B2B startups that are based or in LATAM or Europe or MENA, especially these three regions, and they might be preparing themselves to move into one of these regions, right? From Europe to LATAM, or to MENA, or from MENA to Europe, or to LATAM. These eventually US, but we're more interested in these three regions because we fully believe the opportunity is bigger. And for that, we also look for pre-seed, seed stage. We are looking for strong teams. So that does not count, oh, we are building this startup and we have AI. Who is your AI guy or girl? And nobody, like no PhDs, no. We are not talking about, I want to be something. We are talking about teams that are actually prepared and capable of moving forward with the business that they are trying to build. And especially that business that we can connect with corporates as clients, corporate innovation, corporate as investors. Because we know how to do it, because we've been doing this for corporate. And if this is a new startup that can connect with one of these three doors, or a combination of them, this is already much better in terms of building up, traction, and further ahead, eventually building up an M&A.
And in terms of the business model of the startup, how do you evaluate it? What do you?
We are pretty much agnostic in terms of verticals or business models. Of course, it must make sense, right? Because it cannot be like, well, we are pre-seed, we do not have a business model validated yet, but we actually don't have any idea. That is weird. So although we are agnostic, that doesn't mean we don't know how to compare startups, right? We've been doing this for many years. So we can understand and even help startups and entrepreneurs to understand what might be the best business model for them, considering the persona they are addressing. So if they are going for corporates, which is our sweet spot, corporate, then we understand well what to do, how to do it. And by corporates, I don't just mean like multinational corporations. I mean even family-owned, medium-sized business and up. From there up, because these are the companies who will be buying startups in the next few years in order to be able to create extra value or value in exchange for something that is dying.
Okay. What kind of due diligence do you carry it out?
Well, first and foremost important, people, founders and team. And by founders and team, I mean skills, knowledge, and execution, like capable of executing, right? And we also try to understand as best as we can, like the team dynamics, how they work together, if they work together well, and especially in the founders, if they're actually ready to understand the journey ahead of them in terms of, if you are a technical person and you want to be the CEO, that means you're gonna have to find out somebody else to be the technical person, not now but soon enough, and you're gonna have to be the CEO. That means a lot of different things to do, and you're gonna have to understand that your job is gonna be different. We also help entrepreneurs to understand how to change hats, because you can be the owner in one hat, but you may be so executive on the other hand. That means you may not be the right person for the job from a specific point and on, right? So
Yes.
we try to understand this. Then we look for the problem, the product, in this order: problem, product, tech, legal, and tax.
And
People
finance. Oh, keep going.
people first, then the problem, the product, the tech, and legal and tax, and together with legal and tax, all the financials.
Okay, perfect. So, in terms of financial, is there any analysis that you like to do specifically, or the most common ones? Can you tell
Well,
us a little bit?
we're gonna ask everything that is, you know, like the checklist, but actually the most important aspect for us is to see through the financials and how they do projections and how they do budgeting, how well they understand the business they are in, because the numbers itself are not going to be those numbers, right? They're not going to be able to make that happen. It's not going to be a reality. What matters to me is to understand, do you really understand the business you're in, to be able to understand your unit economics, to be able to understand how you actually work with numbers. So if your premises change, what happened in your business, can you understand that? Or you're like, no, actually we hired someone to build up this financials just to show you. So if you don't know how to handle your numbers, you're not going to be able to make them happen. So
Very
I
true.
am less concerned about, you know, the numbers being right, because they're not right. I already know that. I am more concerned. By right, I mean the projections, right? What has happened should be accurate. But so like accounting should be accurate. Projections are not happening that way. But can you handle projections, budgeting, market size, and all the numbers, unit economics, etc., to understand the mechanics of your business, the margins, how to create the margins, how to go for profit, how to reach out for profitability. What do you need as levers, like to foster your growth, your traction? How this is, like, if you change one thing here, what happens
What?
elsewhere?
Yeah.
If you understand this, then you're actually very well prepared to deal with everything that's going to be different.
Excellent. Rodrigo, how do you manage risk, and what support do you provide to the companies in which you invest?
Well, in general, we in the very beginning, we always keep supporting the companies in three different ways. If they already have an advisory board, not a board of directors, but an advisory board, and they need help, we can play this role. We don't force things unless we are the first investor. We don't force anything. But eventually, as an advisor, board member, or or we keep an eye on things that they may need, connections, understanding how the corporate world works, how to connect with corporates, how to deal with corporates, and how to make business happen. These are things we know really well, so we help them with that. This works more like a combination of because that cannot happen in the advisory board meetings. This happens in a more operational aspect of it, which is kind of a mentorship slash if they need a specific help and they ask. And other than this two, the third way we also help startups is by because we travel a lot, so we end up knowing and being introduced to people who might actually be not necessarily just investors, but new customers. We have a huge network, international network. We can help them with that as well. So these are the most relevant ways we help them. We deal with risk pretty much knowing that early stage investment is riskier than the next stages. So we understand that. We do not um, keep disturbing the entrepreneur and the team every day or very frequently. We are not passive at all, but we are also respectful in a way that if they are not asking for help, that probably means they're not needing anything right now. But we keep an eye open because sometimes they're not asking because they actually don't know how to ask, or they don't know that they should ask, right? So we try to balance this in order to keep an eye on the risk, and of course the either monthly or bi-monthly or quarterly meetings where we're going to discuss the business from like an advisor board perspective or a board perspective.
Excellent. Talking about possible exit routes, how and when do you expect to get a return on investment?
Well, our thesis is more focused on M&As in the future.
Okay.
Not necessarily, we will always play, if we are like investing from our own funds, we will always play the card that is maximizing the value creation, because we have to, we are accountable for that. Our LPs expect that from us. But also, we always look into this M&A as a route that is much more interesting as an exit than going for example, an IPO. However, that's on the entrepreneur. It's not our decision as a minor equity partner. We're gonna always respect the entrepreneur's decisions, but we try to help them to understand the opportunities that are available. If we're managing a CVC, for example, that's gonna pretty much follow the strategy designs. But in general, we always advise corporates to focus not on a cheap M&A. We do not manage funds when they are like going for a cheap M&A. We always look into, you have to maximize the value creation, because eventually you're going to buy the company eventually, but you may not buy the company, and you're going to be one of the investors looking for an exit. So you cannot mess up with nor the cap table nor the exit strategy. However, the one thing that we are not targeting is the IPOs. Definitely,
Okay.
I really do not believe in IPOs that much for startups. And the number of successful cases in the world when compared to the number of startups is really small. And even the unicorn metric is bullshit, because you cannot You cannot use something that's intangible and does not exist as a metric of value. Value means your LP call back the money and you have the money to pay them back with
Mm.
profit and impact. In our case, we always go also for the impact. So most exits will happen through either an M&A or a Series C or later stage.
Excellent. In terms of advice for young entrepreneurs that are probably looking to attract the attention of professionals or investors as yourself, what would you tell them so they can approach you?
Well, first of all, I guess it's this. We invest in early stage startups. That doesn't mean we invest in ideas. We have done that in the past to learn. We don't do that anymore. And eventually, if something like this happens, it's not going to be our fund, it's going to be Rodrigo. But to convince me with an idea, it must be something that is incredibly and amazing, which is almost certain there is no chance that you're going to have this idea. And I explain why. Because actually, ideas are not what we're looking for. What we're looking for is problems that can be solved. Ideas are how you imagine a problem can be solved. Until you prove to me that you have take your hypothesis, test drive this with your persona, validated enough to say, hey, this is not an idea any longer. This is actually a problem and a solution. That means problem, solution, fit. So the secret is exactly this. Do you understand the problem well? Does your hypothesis, did you validate your hypothesis? Yes or no? And how strong is your validation? So if both things are true, that means you have a problem solution fit. Then you can talk to us. But in general, that also means you're gonna have to test drive your hypothesis. You must come up with much more than one. You're gonna have to test drive other things because most probably your first one is gonna be your idea. It's not going to stick, not going to be validated, and you're gonna have to change because ideas doesn't come from how well you understand the problem. It comes from the fact that we tend to believe that we know better because it's our idea. It's like a baby. Our baby is most beautiful than our baby is the most beautiful baby, and everybody else's look like a knee, right? But
Yes.
ours is beautiful, look like the mother. That's a lie. Look
Mm.
like a knee the same way as every other baby. So we I have this thing about ideas. I can give you ideas. I love to answer this question for entrepreneurs. Oh, but I can't tell everybody my idea because they're gonna copy it. Okay, go to my office. I'll give you 1,000 ideas. That doesn't mean you're gonna be able to pull them through. That doesn't mean you're gonna be able to execute. So ideas are like a cloud in the sky. If you can make
You
them
find
tangible, that
thousands of them.
yes. And by the way, I have read research showing that in between 7 and 10, wait, every second, in between 7 and 17 people in the world have exactly the same idea.
Wow.
I'm not sure if the research is true, but I fully believe in whatever number because it's not going to be original. There is no like
Mm.
there's nobody have ever come on, unless you are
Yeah.
actually completely changing something that comes out of a lot of research, laboratory research, a lot of effort, a lot of test drive, a lot of pilots, etc. If you have all this, I would like to talk to you, but that's an idea, forget about it.
All right. So, Rodrigo, I will share your social networks with everyone. I do have LinkedIn. I will put it on comments and I will pop up to everyone. so they can see it. So your LinkedIn is Rodrigo de Alvarenga,
Yeah.
just like it sounds. The web page is Hack Ventures, HAG.Ventures. Now I'm showing to everyone Hack Ventures. And also you have a web page, your personal web page, that is rodrigodealvarenga.com.
Yeah.
rodrigodealvarenga.com, where you can find this amazing guest that we are talking with him right now. And also, but not least, an Instagram that is Rodealvenga. So it's like Roddealvarenga. For those that are listening this, I need to pronounce it. It's better if you go to the YouTube and watch this again. Rodrigo, I do have I want to move forward on this interview that we have and move exactly to trigger questions. Ta-da-ta-da-ta-da. So the idea here, Rodrigo, is that you answer are really, really short answers because we are running out of time, and you know that, well, you know, we're running out of time, and that's basically it. And the idea is short questions, and if you want to expand, real quick, okay?
Okay.
Alrighty. So the first one is, Rodrigo, what is your life purpose?
To transform others through education.
Number two, who has been your biggest inspiration on your path to success and why?
Actually, 4 or 5 people that I worked with in different points in my career. My father, the first one. After that, um, one of the most important bosses I have ever had, Paulo Maia. After that, Carlos Watanabe, Francisco Cocaro, and last but not least, more important than everyone, my wife.
Oh, amazing. Number three, what is something you have always wanted and still can't get it?
Vacation. I still can get a vacation, my dream vacation, right? Not doing anything with my wife for 2 weeks.
Yeah.
I am still pursuing this dream
Why haven't you done it yet?
because I always find something to do. And she has a lot of patience with me because otherwise she would have killed me already.
Yeah, I can imagine that. Number four, Rodrigo, three startups or companies that catch your attention.
Okay, one of them I can mention, Central de Materiais. It's a Brazilian startup that is going internationally really soon. They are doing an amazing job in helping corporates to deal with assets that have expired somehow or waste. Amazing startup. And the other two I cannot mention right now because we are considering investing on them. So it's not going to be. I'm not allowed to
Okay.
mention.
Understandable. Number five, Rodrigo, the best advice you have been given in life.
Wow, that's easy. Um, I was taught by an executive vice president of the one of the banks that I worked for back many years ago, how to learn on. Uh, Let me rephrase. He taught me how to say no,
Oh,
and he explained me this like, Rodrigo, if everything that you do is to look for a yes, you're gonna do things that you shouldn't just to end up having a result that's not necessarily the best result. So keep your eye on the results you're looking for, and say no when you need to say no. And everything that happens is going to be much better, even the things that do not happen. That was amazing.
And how have you put it on practice?
Oh, yes. Oh, definitely, yes. I have learned that lesson the hard way with him. And after that, I always use this as a kind of a piece of wisdom to guide me. If you're forcing too much to make it happen, that means you are doing the wrong thing, right? Things should happen because it's actually good for both sides. And if you're forcing, that means it's not that good for you anymore, and you are just trying to get there. This is why I do not like sales, because you try to get there, and this feeling of doing what I shouldn't do, or doing something that doesn't seem to be appropriate or the best answer, because I'm a bit of a perfectionist, kind of, it makes me feel like weird. So yeah,
Sheldon, the Sheldon character.
second part of me, it's yeah.
And the last question, Rodrigo, is how would you like to be remembered when you are no longer in this life?
The only thing I want is pretty much to be remembered as someone who helped the fellow person.
Excellent, excellent. So those were trigger questions. The only thing that is missing here is the bonus track of the show, that is basically recommendations on your behalf about books, what else? Movies, series, or anything that you would like to share with everyone.
Okay, so I have prepared. I didn't know you were gonna ask me this, but I prepared something for the end. So I have here, because we are talking about.
Wait. If you want to tell like your last words, let me put you on first screen first. Okay, there you are.
So I guess the best advice I can share with entrepreneurs and whoever is listening to us, I hope you like it. And this connects with the main subject of today, which was about investment, etc. So I have three very specific phrases for financial readiness and three for investment readiness. Financial readiness first. There is no successful fundraising without proper financials. Surviving out there is hard. Budgeting is your basis to keep your business running. When you look for investors, forecasting and modeling a business is an art of the same importance as the idea. These are the three phrases for financial readiness. And for investment readiness, there is no successful fundraising without preparation and preparedness. Fundraising is hard. Being prepared and relentless is your best strategy to succeed. And last but not least, valuation is an art more than a technique, since independently of what you find using one or more methodologies, it is going to be truth only if both sides agree. So with that, I thank you very much. Thank you, Rodrigo, for inviting me. Thank you, all of you, the audience, and all those who are going to listen and see this later. It was a pleasure to be here, and was a pleasure to share a bit of my life and what we do and how we do it nowadays. Thank you very much. I hope to see you soon.
Beleza, Rodrigo. Valeu.
Fue un prazer.
Muchas gracias. Nos despedimos y damos también rápidamente un saludo a nuestros auspiciadores. Ahora estoy hablando en español, pero toda nuestra entrevista fue en inglés, por eso no podíamos hacer la mención. Le damos las gracias a CFO Analytics, International Center y Retrodomos. Ahora sí, Rodrigo, take care. Bye bye.